concern around the state of Eskom, as we thank Mr. Silwane from the PSC for joining us. Let me take you to Eskom announcing its interim financial results at its headquarters in Sandton. Let's go there live now.
With Unit 2 attaining commercial operation status on Tuesday this week, the unit now forms parts of Eskom generation output, contributing another 794 megawatts to the South African power grid. Medupi Unit 3 went into commercial operation in July, also adding a similar 794 megawatts of power to the grid. We have also synchronized Gusile Unit 3 to the national grid in April, followed by the last 6 of Medupi power units, Unit 1 in August. In addition, another 45 kilometers of high-voltage transmission lines were commissioned, further strengthening the network. These are significant achievements which talk to our commitment to expedite the completion of the long-overdue build program and in turn alleviate the pressure on the supply. In relation to our cleanup efforts, we have completed lifestyle audits of executive senior management. Cases flagged as high risks were handed over to the Special Investigation Unit for further investigation. And I am aware that some of these cases have now moved to the NPA, and some are at the ready for when the special tribunal sits to prioritize some of Eskom's issues. We furthermore finalized a total of 145 investigations into fraud, corruption and irregularities, with disciplinary action recommended in 122 of these cases. Our governance cleanup efforts continued to yield desired results. The High Court has ordered Trillian to repay 600 million it received from Eskom between August 2016 and February 2017 in the absence of valid contracts and in some instances where no work was done. Although Trillian has appealed to this judgment, we are optimistic about the positive outcome. We have successfully recovered 1 billion from Mackenzie through similar processes earlier this year. Eskom has also issued court papers to set aside contracts and recover 207 million from Deloitte's Consulting for improperly awarded work. We remain committed to recover monies from whoever unduly benefited. This includes staff present or past, directors present or past, suppliers present or past, and we are not going to give in on this one. While we have no doubt that we will continue to confront headwinds, we remain committed to making the bold and difficult decisions that will ensure that Eskom fulfills its commercial and developmental mandate and regain its reputation as South Africa's trusted and credible supplier of electricity. We concede that the Eskom turnaround remains a difficult and a long journey. So much still has to be done to build on the improvements we have already made. This will continue to require a partnership that is embraced by everybody as we approach our challenges from all our stakeholders, where difficult choices and trade-offs will have to be made with the aim of achieving a sustained success. The ultimate goal is to make Eskom profitable, transparent, agile, and top-performing organization that is financially independent. Before I ask the CFO to give you an overview of the numbers, I wish to convey my sincere thanks to the Eskom leadership for their continued and unequivocal support. I'm equally thankful to all of Eskom's employees for their resilience, dedication, and commitment in keeping the lights on to power our great nation. I personally thank them for making for taking on their task with the diligence, with all the required diligence amid all the challenges. I also like to thank my colleagues on the Eskom board for their strong support and the guidance that they continue to give us. My sincere appreciation also goes to our customers, stakeholders, and all of South Africa for being patient with us. We remain grateful to the shareholders for the ongoing support as we go through a tough and arguably the most uncomfortable phase in the history of Eskom's 96 years of existence. Lastly, I want to reiterate the importance of leadership stability as a critical factor in Eskom's turnaround. With that in mind, it would be remiss of me not to deal with the issue of the appointment of the new Group Chief Executive of Eskom, which has caused much excitement in many quarters. The decision to appoint Andre de Ruyters, I'd like to assure you all, it's a decision that has been through the most credible process, the most thorough process ever imagined. It's only one position that we had to fill. No way we would have employed all the 142 applicants that have raised their hands. And in the 142 people that have raised their hands, we've had school leavers to 75-year-old people, any and everything in between. I want you to hear it from me as part of the board that did these interviews, that once we had settled on the 6 candidates that we were going to subject to an interview, the 6 candidates we had were 4 non-black, were 4 white. The 4 whites, 2 were South Africans, 2 were non-South Africans. The 2 black, one was a South African black, the other one was a non-South African black. Those were the 6 candidates. Not the names that you've seen in the list that members of the media were disappointed that we were not appointing from that list. It was also not in our place to go out and comment about that list. So the so-called surprise is because there was no leak. Commentators had their own list, so they were surprised when we did not use their list to choose the 3 that we recommended. So I also want to assure you that we are satisfied as the board of Eskom, and we are very grateful that the shareholder, having followed its own rigor, have come to the same conclusion that Andre de Ruyters now is the most suitable, able, available, and willing South African to take this job. So I would like to plead with all South Africans that not only Andre needs all the support that he can get, he needs the space and the time by all South Africans to lead us as we go through these changes that are facing us. The board is fully supportive. I'm grateful to hear the government is. I'm grateful to hear that all our other stakeholders are supportive of this decision. So please, ladies and gentlemen, let's give Andre the space and the time. Let us engage in a separate discussion if it becomes pertinent, to use facts to deal with the NAMPEC track record. If it was a NAMPEC discussion, this, from what is published, I would take you through our read of that. Share price is a very important indicator. It's not the only indicator. You want to see South African companies that have lost a third of their value in 1 year for doing business in the markets which Andre's Nampek went into before he was asked to come in. We are satisfied that Andre is the man for the now. So, with that in mind, I just wanted to make sure that I have addressed this point, and I'm looking forward to welcoming Andre here and introduce him to Eskom and hand over the baton to him and give him the support from the board. But I also think it would be important that, let me restate now, the discussions I've had with the President, with the Deputy President, and the Minister as we went about on this recruitment, we were never given any script as to whom to appoint. We were told to appoint the person we consider suitable and the person we as a board and Eskom can work with. And that's exactly what we've done. So I hope I can count on you to support us in this. There aren't many people that would want to be so selfless to leave better paying jobs, not to come for a lesser paying job, but be prepared to take less than the average of the last 3 CEOs that have worked for Eskom, to lead from the front and demonstrate that the pain they want all other stakeholders to take, whether it's suppliers or customers or staff, they too are prepared to make some sacrifices. So, ladies and gentlemen, with that out of the way now, I, on behalf of the Eskom board, wish to convey our congratulations to Andre de Ruyter on his appointment as Group Chief Executive of Eskom. I thank Andre for putting up his hand and to take on this monumental task, and wish him well in his new role as I pass over the baton to him on the 15th of January. Thank you for your attention, and I would like to ask Andre to talk to you about the numbers. Andre, Caleb, you should get used to this name. That's going to be your boss. Caleb.
Thank you, Chair. I didn't ask for the promotion. No, I don't want it. Thank you. I think good afternoon, ladies and gentlemen, members of the media. The Chairman has covered a lot of the topics. The slides does address many of those issues. My intention is not to repeat those, but to highlight in particular on certain slides and to enhance on what the Chairman has presented here this afternoon. I think we understand that from a financial perspective, this is an interim review, and important that when the auditors looked at the 6 months results, they do draw your attention around the uncertainty around Eskom's going concern. That is highlighted in the review, and in particular, we are a going concern based on the government support that has come through in terms of the first budget speech as well as in the follow-up of the special appropriation and the signing off of that bill. I think that for me will be the key message as I explained during this presentation, and it's reflected in our financial position. Our current liabilities of 95 billion exceed our current assets of 82 billion. Everyone understands from financial theory you'd want it the opposite way, where your assets exceeds your liabilities. Having said that, let's go into the presentation. And in terms of what we said as the Eskom plan, and we know from when we spoke last time, as the Chair said, the roadmap has come out. But what I want to really focus on here are the key elements that will contribute to Eskom's financial sustainability, and not underestimating or under-disclosing the importance of operations linked to Eskom's financial performance. It's basically the other side of the coin, that when the operational performance improves, we see that in our financial numbers and our financial position and liquidity. So it's really about what is happening on the revenue line. From our perspective as Eskom, we need to contribute ourselves from a cost savings initiative and reducing our cost base. We've committed to delivering 33 billion by 2023. For this financial year, the target is 6 billion, and it ramps up by about 9 billion rand every year thereafter. So far, for the first 6 months, we have achieved about 5.5 billion of savings. We are cautious that the performance for the remaining part of the year may consume some of those savings, and that is why the operation performance, particularly in generation, is key to the eventual results that was alluded to. From a government support perspective, as I said, I'll address that. And we know in terms of the roadmap, we need then to deal with the separation of Eskom into generation, transmission and distribution. In terms of the performance, it was highlighted by the Chair. We've managed to come through the winter without interrupting supply, 5 days during October and November. On the generation side, the team is working on dealing with the existing plant, but more importantly, also addressing the performance of Medupi and Kusile around the defects, and then making sure that we continue with the commissioning of those plants and those units as we've done on Tuesday this week, with the intention then to complete Medupi by about June next year, and then Kusile around 2020. I will explain the cyclical nature and what the numbers mean, and at the end of the day, the operations and the financials go hand in hand. So moving on and just understanding our financial performance, yes, it is a challenge. It's improved from September 18 to September 19, but we do understand that it still leaves us with a significant cash flow shortfall that needs to be addressed. As highlighted, that it's really about the second half of the year in terms of Eskom's performance, with the dynamics of sales volumes, tariffs, as well as the profile of our debt going forward. We are very appreciative of the support that government has put on the table in terms of the 49 billion for this financial year, of which to date we've drawn and utilized 13.5 billion. We are looking then to utilize the remainder by March, because that's when we find many of the maturities arising between December and March 2020. The further support in FY21 of 56 billion and the year thereafter allows us and the board to sign off the financials that with government support we can meet our operational and debt service commitments. So in terms of, now this is an unplanned outage. In terms of the year-on-year performance, you can see, as highlighted, your revenue is going up from 98 to 107 billion. However, at the same time, we find that our primary energy costs are increasing by 13%, from 46 to 52 billion rand. On the employee benefits, we've literally remained flat year on year. And then we've put through an impairment provision for property, plant and equipment that results in that movement on that line item. And we see our other expenses, which is substantially included in these, your repairs and maintenance, your insurance costs, security and IT costs, That has dropped by about 700 million, 8% year on year, giving you the growth in EBITDA for the first 6 months. One does understand that as more units and assets are commissioned, we find the depreciation then coming through, together with the acceleration on the Komati power station. And then obviously as we fund and raise debt during the year, we see that your debt stock has escalated to 454 billion as at in September, and the fact that plant didn't get commissioned, that combination then shows and results in the growth in your finance costs of 14.8 billion rand. And that then continues towards the end of the year, leaving us with the bottom line profit of 1.3 billion rand compared to the 600 million of the previous year. What does this then mean if you look at it and you understand now where's this revenue, what's happening on the volumes? On a total basis, we see about a 1% reduction in your total sales. But if you split that between your local or domestic, there's a 3% reduction of some 3 terawatts. However, on the international side, we have then managed to increase that sales from 6 to 7.5 terawatts year on year. I think it's also important just to highlight that compared to the average standard tariff that was awarded by the regulator of 13.8%, due to the change in mix and consumption patterns, what we find in the first 6 months is that average increases are in actual mode around 12.1%. The point to highlight here around the revenue is we understand that from an accounting treatment perspective, where you have uncertainty around payment levels, in particular your arrears, you are not allowed to then recognize that through the income statement, and that shows 4.1 billion for the 6 months that has not been recognized. And then as plants are still in the synchronization and construction phase, until they commercially operating, we also capitalize that revenue linked to that. Another 4.2 billion rand of capitalized revenue linked to those units. The important point here is as we complete our build program, then that capitalized revenue will flow through to the income statement, improve your EBITDA on your bottom line, and in addressing and resolving the arrear debt situation, we then can also recognize more from that perspective in terms of IFRS 15. So generally what we've seen that the trend of sales is declining year on year by about 1.3% thus far. So if we unpack now our biggest cost item being your primary energy and what has been happening, maybe the first point to start off with is obviously with the lower sales, we can see the amount of sent out on a total basis has decreased from 119 terawatts last year to 115 terawatts. And then if you look on the table, that your coal production has reduced from 104 terawatts to 98, yet we see the cost has increased from 32 billion in September 18 to 36 billion in 2019, resulting in a year-on-year rand per megawatt cost escalation by 18% from 310 rand per megawatt hour to 367. And the main reasons for that is last year at this time when the stock levels were at a low across the fleet, Eskom went out and procured coal that was available. It did come at a much higher cost and premium. That then starts filtering through in terms of your burn costs, coupled with the mix changes where when you use your more expensive coal plant that then comes through in terms of your numbers. To highlight some of the other primary energy sources, firstly on the Eskom OCGTs, last year this time we'd only spent 310 million on our plant. To date for this financial year, 1.1 billion. It is still lower than our initial projections in terms of budget, and at year end we're still expecting on these OCGTs to come in at below our total spend, or at worst case what we spent last year. But again, it's a function of the performance of generation. On the diesel OCGT plant, the DISA and Avon, you can see around the 1 billion spent, 900 million compared to R1 billion last year, and then our international purchases have basically remained relatively flat. So that's just to highlight the volume changes and the cost changes from a primary energy perspective, resulting in the overall portfolio of primary energy increasing year on year by 17%. If we just look at your cash flow situation for the 6 months, one would ask the question, but your EBITDA was 30 billion, why is your cash from operations only basically 20 billion? And the main reason for the difference is the cost that you have incurred in terms of your working capital and increasing your coal stock days from that average of 24 to 55 days, as well as the arrear debts then coming through on a working capital perspective. What it does mean is that we've generated almost 20 billion from operations. However, our debt service commitments for the first 6 months, being both your interest and capital of 31 billion, Eskom is then short to service its commitments by 11 billion rand. We still need to ensure that we invest in our infrastructure, not only the renewable but also the existing assets across generation, transmission and distribution. That was 11.8 billion rand of expenditure that relates to CapEx. And then it leaves you with a total shortfall before the funding that we have raised thus far of close to 24 billion rand. We've then secured 15.7 billion to date for September, resulting in the shortfall of 7.6 billion for the first 6 months. Clearly then highlighting the need for, firstly, the support we've received for the first 6 months of 13.5 billion, which is the first elements of the total 49 billion support for this financial year, to leave us then with a cash balance as at the end of September of 5.8 billion rand. The next slide talks about the municipal debt as well as Soweto. I'm not going to highlight and repeat what the chair has said, but I think it's just important, if you go back to 2015, September it was 5.6 billion, it's now 25 billion rand. This trend is not sustainable. We've increased by 5 billion for the first 6 months. If this trajectory continues to March, then you add another 5 billion and we're going to be sitting at around 30 billion. A 10 billion increase year on year in terms of municipal arrears. That is a key item that needs to be addressed with the support of government. And in terms of Soweto, a total amount of 16 billion that is outstanding. We have made a write-off during this first 6 months of 3.6 billion, which is linked to what we term in duplum interest, where the interest then exceeds the capital, and we then have to write off that of 3.6 billion rand. So in total, your Soweto as well as your municipal arrears is just over 40 billion rand in terms of outstanding debt that Eskom needs to collect. So moving on in terms of Your financial position, really it's a function of, as we continue with our capital program across the value chain, you can see then the assets are increasing from 645 billion rand to close to 660 billion. I spoke about the increase in working capital, particularly around the coal, from the 49 to the 61 billion rand. And then you can see the deterioration or the decline in our liquid assets by almost 10 billion year on year. And then the growth in your borrowings from 419 billion in 2018 to the 454 billion as at September. Ladies and gentlemen, the next item I just want to touch on is obviously our funding. It's very key that Eskom can deliver its portion of our borrowings. We've have secured 61%, 28 of the 46 billion. Maybe just to highlight, in our funding program of the guarantee portfolio of 350 billion, we've committed most of that with only 16 billion rand remaining. I think it's important to also highlight we've drawn down 291 billion of that. The importance I just want to talk about is more the lower graph, which is your debt service commitments. You can see for this financial year that your capital and interest added together, it's 86 billion rand. Now what's important about, firstly, on the positive side, we do see the trend going down. But the total of your debt service commitments is still significant over the next 2 years. Yes, another 70 billion and then 68 billion rand. But let's look at this line of interest costs. You will see in a later slide that whereas coal is around 55 billion of our spend and our biggest cost item, the profile of Eskom's costs has changed significantly. Where we find ourselves now, interest is now the second biggest cost item. It's even more than our staff bill. For this financial year, we look to spend about 35 billion on capex. I think this is a clear signal that something needs to address and restore this situation. You cannot have your interest being more than your capex spend. It's just telling you that you are not sustainable. That is important, and I'll explain that in particular when we look at the next slide. So yes, this focus is on 6-month results as at September, but I think it's important to see what does the full year picture look like in terms of, we tried this graphic to try to explain this. And one will ask the question, with 200 billion rand of revenue, how do you make a loss of 20 billion rand? Where is this money going to? And I'll try to take some time on this slide because I believe this is the crux of our financial situation, what needs to be addressed, not only from Eskom perspective, but more importantly from the work with the CRO and government in putting us on a sustainable path. So there's your revenue of 200 billion rand for this financial year. Our total operating costs, and this is primary energy, this is Eskom production costs, our coal costs, our nuclear costs, fuel costs, etc. We call this primary energy non-controllable. Now, we're calling it non-controllable because this is substantially 25 billion rand of that. 26 billion is the IPPs through the Department of Energy and Mineral Resources process in procuring. Yes, it is a pass-through from a regulatory perspective, but we're just separating to understand. So 26 billion rand sitting here, and then the remainder everyone would understand is the environmental levy of about 8 billion rand. There's our employee benefit costs, where we are projecting to end at the end of this financial year. You've got repairs and maintenance of 17 billion. and your 4 billion rand from operations, about 2 billion of that is insurance costs, and you got security, IT, and some of your other costs. Then it's your working capital. So what's important here? The sum of this, excluding this 34 billion, we are saying that now is Eskom's controllable cost, 140 billion rand. So from our cash from operations now, this is a year-end number forecast. We think we're going to land at around 25 billion rand from operations. We must raise the 46 billion. That then gives Eskom 70 billion rand worth of cash available. But what must happen with that cash? We must service debt, the capital and the interest. Those two numbers, as I highlighted, is 86 billion rand in terms of debt service commitments for this financial year. And we also have to then spend and fund the capex of 34 billion. So the sum of those outflows, the 86 and the 34, is 120 billion rand of outflows. But we've only got inflows of 70 billion. That then gives rise to, we're calling it the debt service gap or the revenue gap of 50 billion rand. So this, in summary, is highlighting to you, the audience, to understand and appreciate why it also was necessary for government to support us with the 49 billion support in the form of the combination of the initial announcement during the budget speech plus the special appropriation. I think what is critical going forward, that how much can Eskom contribute to reducing this cash flow shortfall of 50 billion? Now remember, I've said we committed and we need to deliver our 33 billion of savings. So yes, as we move down the timeline and we embed those savings, that part will reduce based on what Eskom can contribute to the party. Understand that our 33 billion is a combination of operating costs and cash flow savings. What we're saying, if we had to save the full 50 billion out of this controllable cost base, it's 36% of the cost base. 36% across your primary energy, 55 billion rand of that is sitting in coal, and then your employee benefits, repairs and maintenance. We know the maintenance that's required. There's insurance and there's security and IT there. On that item, we believe we must do it much more efficiently and timelessly. We don't believe there's significant room. So one needs to understand, where do you find 50 billion rand between substantially that item and that item added up to 110 billion. So in solving this equation or conundrum, this is what we need to address, and I've highlighted the debt service commitments going forward. So in what we're saying as those 4 pillars that we touched on earlier, once you've dealt with the costs and the cost base, there's only 2 other items you are then left with to deal with. What happens on the revenue line in terms of the tariffs, and can you then deal with the debt situation of 450 billion, and what combination of that? So I think that for me is the crux of our financial situation, why the importance of the support, and more importantly, what needs to be addressed going forward. Otherwise, I can't stand in front of you and say, we are not going to go back to government and say we need support. I think this is highlighted in what the Minister of Finance has said. Yes, we've got this support to date, and he says, if you need any other support, it will be in the form of loans. So I think that's the reality, and I guess this is the big thing that needs to happen as quick as possible, but understanding that what we said from a plan perspective, all elements need to be addressed, and it needs to be addressed simultaneously. If you only deal with the debt and you don't deal with the tariff, you'll still have a shortfall, it'll be smaller. If you deal with the tariff and not the debt, I think you'll still have financial challenges. But more importantly, the revenue that you are billing, if you are not collecting it, that contributes to your cash flow challenges. So In terms of year-end, the Chair has touched on the drivers from a cyclical basis. How do we move from basically this profit for the first 6 months to a similar loss of 20 billion projected at March 2020? In terms of the operational performance, we have spoken about this. Maybe just to touch on, yes, the 9-point plan has addressed some items. Cold stock days, we are very happy with where it is now, with only 1 below the minimum level. In terms of preparedness for rain, we're comfortable with that. 2 outages should come back. That's the projection from the business by end of January 2020, some 1,100 megawatts of that. And then dealing with the partial load losses of 3,500. At the end of the day, that performance goes a long way to our financial situation. And in terms of just showing the stats as highlighted, your EAF sitting at 69.9 compared to 75. I'm not going to repeat what was said. I think it speaks for yourself. And in terms of the network performance around the transmission challenges as well, whereas distribution is stable. From an environmental perspective, it's important that we deal with the particulate emissions. And you can see that the water consumption trend has been flat year on year. From an electrification perspective, just under 78,000 connections for September 19. Lost time injury down, reflected at 0.32. And regrettably, in terms of fatalities, 5 contractors and 1 employee and 1 contractor compared to the previous year. Procurement numbers reflect just under 61% of black-owned spend to date, and then our investment in terms of corporate social beneficiaries. Governance, the Chair has touched on that. I think he's covered all the items. Maybe the point just to highlight, other than repeating, we've seen for the first 6 months on our reportable irregularities, we have not added any new items. Yes, the items still remain open, and we're working on closing them. We see that as a positive in terms of the governance and the cleanup. From a PFMA perspective and irregular expenditure, yes, the number does grow from the 25.7 as at March to just under 28 billion for September. But if you unpack that, if you exclude the opening balance, as we continue to clean up, you can see there are still some items that are flowing through from the prior years that were not identified, or 400 million. It's much smaller than before. Those contracts that are irregular and you continue to spend against them until they complete or condone, that will then come through as irregular expenditure during the year once it's incurred. And then new items for this year is 900 million for the 6 months, with 1 item contributing 856 million. We know we need to work together with Treasury to deal with the condemnations, but we will have to be in a position to demonstrate that the processes have been improved, demonstrate that we don't believe it will be repeated, and the necessary consequence management has been dealt with. You've seen the number of investigations that the Chair has highlighted. So, in conclusion, I think it's all about the operating performance first, which is critical to the financial contributions. More importantly, as highlighted on the slide that I have spent more time on, that yes, Eskom must deliver its part of this equation in terms of cost savings and reductions. However, that alone cannot solve the gap that we're looking at. We must deal with the arrear debt situation. We must also make sure that the tariffs do put us in a position where we can then generate positive returns meet our debt service commitments, and then also have the discussion with government around the debt stock that is currently on the table. Can't have a situation where your interest bill becomes your second largest item in this cost base. And going forward, we'll work on that. But I think maybe one needs to ask the question, I was asked earlier today, 20 billion loss last year, another 20 billion loss. Is there any improvement? Are we going to get out of this? I personally believe, from the numbers I've seen and my understanding of Eskom's financial situation, I think this is the trough or the peak of our losses. And why I say that, it's important to understand we need to deliver our cost savings. And if you go to what we said, delivering this year and then adding 9 billion each year thereafter, if I just use the 20 billion, that will help improving the EBITDA and then reducing the loss. The second contributing factor is obviously, even with the current decisions, the price of electricity for the next financial year is around 8%, the year thereafter 5%. I've not built in any potential court decisions. So that's alone, and if the trend on sales volumes remains that reduction around 1.5%, together with our ability to address the collections, and then once we commission our plant, you will then also recognize that revenue. I do see then the loss situation of Eskom reducing in FY21 and FY22. If all the elements come together, I think 2 to 3 years we could be seeing where we then move from the red zone into what I would call more a yellow zone, where we basically can meet our requirements. So yes, it's not nice to say 20 billion 2 years in a row. And then obviously what I'm also highlighting here, without expressing the number, yes, there will be a further loss thereafter, but we do see this then turning around thereafter. But Eskom must do its part. Customers must do their part in paying for what they consume. Monde mentioned today that you must move from a consumer to a customer. The difference is the customer pays, the consumer doesn't. So I've learned that today. But I think it's important that the cost base, we need to deal with it, and we can't have a situation where interest becomes your second cost, highest cost item in terms of the value chain. I thank you.
Thank you, Mr. Mabuza, and thank you, Mr. Kesem. We now enter the question session. Can we follow the normal protocol in terms of introducing yourself? I'm also going to ask you to edit yourself if you can, please, and limit the questions to 2 if I do call on you. So let's start on this side of the room. Are there any questions? Thanks, Terence.
Terence Creamer, Engineering News. Just on the 2 items that are sort of not in your control, the debt relief and the tariff relief. Those are the 2 big items that you highlighted. What are the options on the table for the debt relief, and how much breathing space do you have in terms of the injections or the fiscal transfers you've got to get to a debt relief?
There you have it, South Africa, from the Eskom headquarters, Megawatt Park. The picture is ugly. It's actually horrible. The words there from Caleb Kasem, who is the Chief Financial Officer of Eskom, predicting that in addition to the 20 billion rand loss that they made last year, 2018 to 2019, they will actually go on to make yet another 20 billion rand loss for 2019, 2020. There's a bit of good news, but really when you take it in the bigger picture, they're talking about making a profit of some 1.3 billion rand in the first 6 months of this financial year. That's really nothing compared to what they are now predicting will be a loss of some 20 billion rand for the full financial year. That adds to the 20 billion rand losses that they made last year. And also Caleb Kasem, they're subtly saying that there may be further losses beyond the losses that they're going to report at the end of the financial year, but then giving us a word of hope, saying that he believes that we have reached the peak of the losses and perhaps we could move from the red zone to what he calls a yellow zone. The job couldn't be tougher for Andre de Ruyter, who comes into that position, of course, being defended, his appointment being defended there by the Eskom chairperson, Jabu Mabuza. He's just coming from Nampak, which reported a loss of some 390 million rand just yesterday, and he goes into a company called Eskom that actually is making losses year in, year out. So there was the briefing at Eskom that was on the go just now.